Welcome back into Crypto Smart Analyst. Today we're going to be talking about chart patterns and how to use them, how to identify the chart patterns and how to use them. So let's dive in. Before we go on, I would like you to follow us and follow the channel. Follow us on Instagram. You can check out Crypto Smart Analyst. The link is in the comment section below, is in the description below. Check out Crypto Smart Analyst, and you can also join the group, the community, where you can be able to type and chat and ask any question you want to ask. And at the end of this video, if you have any question, please you can comment it in our group on Telegram, or you can actually drop it in the comment section of the video. We'll get to respond to them. And don't forget to like, share, and subscribe. Thank you. So today, talking about chart patterns. Chart patterns and chart pattern cheat basically. There are different ways, there are different type of chart patterns. We have the continuation patterns and we have the reversal patterns. And note, whatever chart patterns you're reading here also applies to Forex, crypto, indices, stocks, and whatever candlesticks, because candlestick patterns and analysis are more or less relative. All stocks and trading platform, right? So whatever you learn there, you can use it in any of your trading platform, either trading crypto or trading stock or trading indices or trading whatever. Okay, so we're, like I said, we have continuation patterns and we have reversal patterns. These patterns can either be bullish or bearish. Okay, both continuation can be bullish and bearish. Reversal pattern can also be bullish and bearish. So we're going to be starting with continuation patterns, right? Like I said, whatever on the explanation, whatever you see R indicates resistance, Y, S indicates support. Okay, so like I said, we have the first one we're going to be looking at is the Carpenter formation. So Carpenter formation actually has we have the base, we have the uptrend for Carpenter formation, which is bullish. That's a bullish breakout. You have an uptrend, price uptrend, then hitting resistance, then we have a resistance rejecting. Resistance is actually a point at which an uptrend get rejected. So we have a resistance, then create it, and we have excuse me, and we have a bull-like curve rejection. These are the support, right? These are the support region, but it's actually more like a downtrend than a bull-like uptrend rejection. After having the bull-like rejection, you have another hit of that same resistance. It can either be exactly at the previous resistance or close to the previous resistance. It can be either just between range, either exactly at the previous resistance or close to the previous resistance. Now, this formation can also be relative to what we call double top, right? So now having a double top, you can either say, okay, we have a cup-like and we have a double top. That is, we have a double top means we have this is the first resistance 1, the second resistance 2, making it double. Then we have a rejection downward, more like an ABC, sorry, Elliott wave correction, ABC Elliott wave correction right now. After having the ABC Elliott wave correction, we have a breakout, and you can see we have a downtrend. Then we have a breakout out of that correction, a breakout of that correction. Now, if you're going to be buying, you don't buy exactly here. You don't. There are best way to buy. You either buy support. There are two best way to buy a breakout. Either you're early enough to buy at support, or you wait for the breakout of resistance to be confirmed. Okay, I'm going to go to chart and actually explain that right now. Like I said, now whatever pattern I'm showing you right now on the slide is not going to be exactly the same. Sometimes it might be exactly the same, some it might not be. The pattern is not going to follow exactly the same way you're seeing it on the chart. Okay, those are things you really need to look for. It's not going to follow it exactly, so you have to just look at what is currently relative or something close to it, right, before you can actually determine, okay, this is a Carpenter formation, and I can easily decide, like, okay, first top, second top, get rejected, then we have a breakout. Now this is what I want to explain. The best place to buy is buying at this support, buying here or buying here. These are the best places to buy. If you happen to not to buy here, try not to buy at a breakout. Like if you want to buy at a breakout, you need to wait. You need to wait for a breakout to happen before you buy at a breakout. So let you need to wait for a breakout before you can buy at a breakout. So this is a potential breakout. This is breakout. Now you need to wait for it to break above this resistance, because there's something we call peak out. It can actually break and get rejected. It can break and get rejected. That can happen a lot, right? It will break the resistance, then get rejected again and start going downward. Something similar like to that is what's happened. You can see a resistance got broken. I'm going to find a resistance right now. Let's look for a resistance, right? Bitcoin has a double top here. Yeah, this is something. This is the resistance. This was the resistance. We have a double. This is an inverted. Yeah, I'm gonna get that and explain to you. More like an inverted HNS. So we have a breakout here. This is the resistance, which is a double top resistance. We have a fake out. I'll say fake out got broken, but did not hold and get rejected. It did not hold and get rejected and start coming back down. So you have to wait for confirmation. When a coin breaks out, you have to wait for it to confirm that yeah, it has broken out. Now I'm using a lower time frame right now, so it is not really cool. If I'm going to be doing that, I'm going to be using a within 24 hours and 1 week chart to actually predict a long term. That's for a long time. But if you use a very short term, you can actually be able to play. You'll have taken a profit between 62 to $64,000 before it get rejected, right? So you'll have seen the I think there's a doji formation at the peak that actually indicated a reversal, right? Yeah, this is it. There's a doji formation at the peak. Then we have a short day red candle indicating the reversal. Okay, so if the short day candle are things I've already taught in my previous class, so you can check my previous class to learn about candlesticks and candlestick patterns, how to understand them, right? So we're going to come back to this, but let me make it yellow. Oh man, it is too deep. Good. So that is that about Carpenter. So the same thing, you can have a reverse case. Inverted Carpenter is just the reverse of the first Carpenter we talked about here. So it's just an inverse of whatever you have here is what I have is the next one. So the next one we're going to be talking about is ascending triangle. Ascending triangle is when you have a resistance, an horizontal break, a horizontal resistance, and you have that is your support is actually increasing. That's what we call ascending triangle. Descending triangle is just the reverse, where your support is actually an horizontal line and your resistance is actually coming downward. That is your resistance is getting reduced. Is what we call the lower low, higher high. So this is it. We have a resistance at R. Like I said, R is resistance, is support. So we have a support. So like I said, support can horizontal. It can either be horizontal, it can be slant, like a straight line slant, or it can be in a curve. Okay, so you need to know how to identify your support. So that's the way it goes. We have now, like I said, if you're going to place your buy, the best place to place this order is either here. The best place to place the order is either here or here. So here means you waited for confirmation of this support, of this breakout at here. So let's go to the chart and correlate what I just explained. So we have this. You break down to this. These are support, resistance. Like I said, it's not going to go exactly the same. It's not going to be exactly following the same pattern. So, but you can easily trace the support. So you have this. Support, resistance get rejected, hit the support again, resistance get rejected, support, and before you know it, breaks this resistance, right? It breaks this resistance. Resistance got broken here. Like I said, if you notice this same resistance, this resistance that we have here is the support for here. So there are times your resistance get converted to support, or your support get converted to resistance. This was a support for this previous chart. This was a breakout. This was a support. Major support here was 11,125, right? This was a major support. Then the support got broken. Now the support now get turned to a resistance. After this support got turned to a resistance. So it actually is getting rejected here before now breaking out. Now after breaking out, it tends to become a support consolidation, a supportive consolidation before a major breakout. Okay, you now tend to have a consolidated support before a major breakout. And like I always say, you have to wait for confirmation. If you want to buy a breakout, you're going to be buying a breakout, you must wait for confirmation before you buy your breakout. And that is where you can actually to confirm your breakout, you can use to confirm your confirmation. Yeah, that's something. To confirm your confirmation, right? You need to wait. You can actually use your candlestick pattern, correlate candlestick pattern and moving average. Let's say 8 or 9 moving average. The 8 or 9 moving average, exponential moving average, or moving average. You can use them relative. I mean, correlative with your candlestick. You can actually use it to confirm or determine a breakout point. Because these are things you can also look at for. So let's go back to descending triangle is just a reverse case, just the opposite of our ascending triangle. So having a bullish, this is a bullish symmetric triangle. We have a bearish symmetric triangle. Of a bullish symmetric triangle, you can see we have the breakout. It's not always an horizontal line. It's not an horizontal line, and support is not an horizontal line. Let's look at that on a Bitcoin chart, and that is what we're currently looking at here. So from here, up, hit the resistance, get rejected, visit, then hit the resistance again, get rejected before almost trimming out. Then we have a breakout. We have a breakout confirmed here. That was at 11,700. The breakout point was 11,005. The breakout confirmation. This is the breakout confirmation. Breakout confirmation was actually at around 12,000. Is that's at the sorry, I'm coming. No, breakout confirmation was at 12,002, but it broke out at 11,007, but got confirmed at around 12,002. So these are things you need to look at before you actually be able to determine the breakout point and when to enter, when to take your profits. So if I break out here I got rejected here, I'm actually going to take my profit around here before I enter again, before I get to buy again and wait for it to keep going upward. So that is about symmetric triangles. Next one we have is the bullish pennants. So bullish pennants is the one that actually get to like the amplitude actually get to the lowest, to close to the end of the triangle before breaking out, or breaking out to the upside or downside. If we break out to the upside, we call it bullish pennants. If you break out to the downside, we call it bearish pennants. Now it fizzes out to the apex. So if you have a triangle right now and you get it to fizzle out to the apex, like what we had here, close to the apex here, actually very close. So that's the bearish pennants. And one of the things you need to correlate with it is for you to actually be able to determine the breakouts, you also might need to correlate it with the volume inflow. This for a bullish breakout, these are going to be greens. You're going to have this as green candles. For a bearish breakout, these are going to be red. You're going to have this as a red candle. So for bullish, they're going to be green. For bearish, they're going to be red volume. For volume, you can easily see. Okay, I don't have volume on this chart. You can check if you're on Binance or trading on every other this thing. You can actually add volume to your chart. Or you can actually get to see the colors, the blue or the red, or whichever color you want to change it to. You can easily customize it. Okay. The next one we have is bullish flag. So for bullish flag, it's more like parallel lines, more like parallel support. When the support is parallel to the resistance, right? We have a support parallel to the resistance. It broke out to the upside. We have a resistance. And we have support parallel to and we have a downtrend. Then in the middle of that downtrend, then you get to have a breakout. Like I said, understand when to enter. You wait for breakout confirmation before you enter. So just that's what we call bullish flag. So you have this. It's more like a flag right now. You see, you have this. This is the pole. This is the flag itself. This is the pole. This is the flag. Okay. The same thing is the reversed case is what we have on. We currently have that on Bitcoin right now. I think we had that on Bitcoin recently. But we had not. Okay, it's not bullish flag per se. Okay, we can still say it as bullish flag. Let me clone this and just drag it up. You see that it is, yeah, kind of a bullish flag, more like a bearish flag right now. Yep, not relative, not close. So we had a bearish flag. We're going uptrend, up down, then break the support, and that's a downtrend, right? So like I said, it's all about drawing. Candlestick patterns are like you just drawing lines, and like I said, it doesn't really matter. But what candlestick pattern actually shows is that it tends to, if you understand charts, if you understand technical analysis, you understand the patterns, you actually be able to guess. Like I said, technical analysis or fundamental analysis or whichever analysis doesn't give you 100% confirmation. They only give you probability. Okay, so chart patterns are basically there to identifying chart patterns actually help you to basically identify probable. Come on, English is hard, man. Come on, the probable, the possible, yeah, the possible breakout direction. Sorry. Thank you, English teacher. That's something. So it actually helps you to identify the possible breakout direction. So it doesn't give you certainty. Please note that no chart pattern will give you certainty. No technical analysis will give you certainty. No fundamental analysis. No technical. No on-chain. Horoscope self. Even horoscope doesn't give you certainty. Sentiment too doesn't give you certainty, because at times the sentiment is telling you is bearish, is fully bearish, and it will still be going down, like what we're having on Bitcoin right now. I think the current trading sentiment on Bitcoin right now has reduced to, yeah, we're currently at 7. It has been in extreme fear since last month. 8, 11, 8, these are bearish signals, but with sentiment, it's still going down. So these are things you need to know. So fundamental sentiments, horoscope, technicals, all of them are just to actually give you higher probability, maybe to help you determine and decide which direction the price might actually go. Okay, actually help you decide which price, the direction the price might actually go, and if you're able to decide that, you actually be able to know, okay, place your buy order. Like what I did here, I waited after this breakout. I waited for the breakout to confirm, then I entered here. That's why you have this. I entered here. We actually shot for Bitcoin from 27,000 to around 20,000, 20,300. Yeah, I shot the Bitcoin from here to 20,300 because I waited for the breakout, the bearish breakout. So breakout, this is confirmation that it actually got confirmed here. Let me show the confirmation. So these are the confirmation candle. We have, this was the confirmation candle. After having the uptrend, right? This is it. It broke out here. Get rejected. Then we have a bullish. This is a bullish engulfing. This was the bullish engulfing candle. After having a bullish engulfing, more like a bullish engulfing candle that engulfed this armor, then we have rejection. The rejection actually matches the bullish engulfing, more or less. Actually, even beyond. It's more like engulfs a little the bullish engulfing. That's a bearish signal. That's a confirmation that the price is going down. So that's why I actually entered. I didn't even enter. That entered around 27,150. I will short it downward. So that is how to actually identify your own breakout. Okay. So next time we're going to be talking about is reversal patterns, right? Like I said, those are continuation patterns. Like, oh, the price is going towards the direction, then you have a continuation that is going to keep going towards that direction. That's continuation pattern. But how do you identify a reversal pattern? Like I said, using the candlestick, using candlestick alone, you can be able to identify a reversal pattern using evening star, the morning stars, the doji formation at the peak, the morning stars, the what's it call it now, the double top, the double bottom, the triple top, triple bottom. You can actually use that as confirmation, and those are what we're going to be talking about here. So we have reversal patterns where you actually have we're starting with triple top, right? We have resistance, we have a support. How do you identify a triple top? When you have a breakdown, a triple bottom, identifying a triple bottom, you have a breakdown to the downside, then you have a first, this is the first support, get rejected, it hit the resistance, came back down again, it at the support again and get rejected, went up and came back down again and hit the support the third time. Hitting the third time is actually confirmation of triple bottom. And normally it's best to use this on a higher time frame, basically 24 hours time frame, or probably 12 hours to 24, or even a month, or a week, or weekly time frame, right? That's when you can actually get to see it and see it clearly. Okay, so if you're using a short time frame, you actually might get confused. So having a triple bottom is a bullish signal. So when you have a third one, that's a potential breakout. Now that breakout doesn't get confirmed until it breaks this resistance. When it breaks this resistance and you see the confirmation, that is when you can actually decide, say you want to enter into it, then you can take your entry and you can take your exit, take your profits. Okay, and the same thing go with triple top. It's just the reverse of that. When you have a resistance hit 3 times and you have the breakout of the support, this is the support, and your support got broken. Once the support get broken, that's an indication that the price is going downward. That is, sometimes you might say, okay, it's possible for you to have a triple top. I feel like, okay, yeah, the resistance the support it still holds. I think it's going to go up, so you keep going up. You have a triple top and it start getting rejected again. at this point you might still be saying, okay, there's like that is when you see me saying we have a 50% chances here. That is at this support, because when the price comes back to this support, that's like 50-50. Is that it goes back up or it comes down. So at that 50-50 range, if it breaks it below it, then that means the percentage of it going downward has increased. But if it hits it and get rejected, that is the percentage of it going upward has increased. So the probability of it going upward has increased probably. So you can easily decide. So when you break this support, that's an indication that it's going down. Then you can easily place your entry and short it, and you can make profit. So the next one I'm going to be talking about is top bottom and double top. So they are more or less the same thing, only that we are hitting it 2 times and 3 times. Like I said, this pattern is not just a straight line. Is that these are green? Whatever this straight lines are, what you're seeing, they are direction. They are candlestick direction, more like red and green candles. So that shows the user sentiment. Like I said, the red and the green you've been seeing in the chart shows user sentiment. So you have the uptrend, a downtrend that broke this resistance. It is support, first support, get rejected. It is support the second time. This is the first support, second support, get rejected, and after getting rejected, it now breaks the resistance. Once it breaks that resistance, then you can take your entry. Let's look for that on Bitcoin chart, either double top or double bottom. Yeah, but like I said, there are potential. There are places you can actually see double top. So like I said, your double top can be a range or a figure. It shouldn't. Most times it is a figure. So you like what happened here. We have the first top for Bitcoin is at 64,851. That's the first top. The second top was 64,864 is at 65, yeah, around 65. So we added this was the first all-time high. This phone get broken. It was supposed to do a double top here, right? It got broken, got rejected. Danced a bit, got broken, got rejected. And before you know it started going downward. This is a double top. More like a relative to double top. Let's look for something that's really relative, right? Very close. So we can call this a double bottom. This is the double bottom, right? So we have the downtrend. We have the downtrend. Let me draw the arrow. Yeah. We have a downtrend. Support. Resistance. Support. This is the second one. This resistance got broken but get rejected. You see, this resistance got broken but got rejected. This is second resistance. Like I said, it's not always perfect. Got rejected a bit before we finally have our own breakout. Okay, so you can even call this is relative to your what do you call it, the cup and handle. So this can actually be your cup. So you have a cup, you have a handle. Within the cup and handle form, you have a double bottom before we have the breakout. So there are things you can get to look out for. Double cup and double bottom and double top, and the triple bottom and triple top are signals. They are very strong signals that when you see them, they are indication. I think if you go to one, yeah, I think we have the same thing on one chart. I was bullish on one this year, but when I saw a double top on one, this is it. I saw a double top on one, this is it. Yeah, here. When I saw double top on one, I told everybody, guys, short one is going down. This was the first time it got rejected. This was double top region. That was it. So it got to 0.37, got rejected, went back again to test it, and when it got rejected again, then we start shorting. But we keep shorting with caution because we can actually have a rejection that would later break out. But unfortunately, one did not hold, and that was what happened. This was where it actually finally broke. It did not hold that AB. Doesn't hold the ABC relative pattern. So when it did not hold, you start seeing the downtrend, and before you know it, you can see one going down. Currently it's at 0.002. So this is actually a very cumulative region. Is a what is it? Yeah, cumulative region right now. One is currently at a cumulative region. So I'm still waiting for one at 0.01 anyway. So let's go back to that. So the next one we're going to be talking about is round bottom. It's just relative to somehow correlative to Carpenter, but it's just a round bottom. You have a downtrend, you have a round bottom, then you have a breakout at the resistance. The same thing, the reverse is the rounded top. You have a rounded top, you have a rounded top, then you have a breakout, and you see the support breaks. When the support breaks, you can say the support is not here. The support is actually here, not here. So you have to understand where the support is. When the support get broken, then you can start shorting and taking a profit. And you can also correlate that with the volume. The volume here is going to be green. When you start seeing the volume descending, and you see the price action also, so you have to correlate the volume and the price action. When the volume is descending and the price action is also descending, that's an indication that the price is going down. And when you start seeing the volume increasing, that's going to be green. For bullish, is going to be green line. Volume is actually increasing, and the price is also going up. That's an indication of a bullish trend. Now you have to wait for confirmation. Resistance got broken, then there's a resistance. There's a confirmation of that breakout. Then you can actually take your entry and take your profit. That's it. So the next one we're going to be talking about is the inverted head and shoulder is a bullish trend, while the head and shoulder itself is a bearish trend. I think we have that on Bitcoin as well. I think I'm going to check here. And while you're looking at so we have the downtrend, we have the shoulder, then you have the shoulder, we have the neckline, you have the head, shoulder. This is shoulder, head, shoulder, just like my head, my shoulder, my two shoulders, just like that. So this is it. If you have the head, the shoulder, and the shoulder, your hand is down. That means it's a downtrend. That's it. Just like a human being. So you can have the head, and it's possible for you to have the head, the shoulder, and you have a support, and you have it break out like that. Okay, get rejected again, get reversed, more like a bed. I'm seeing a bed right now. That's what I'm saying, a bed. Okay, so you can have it like that. So now let's look at that on a chart right now. This is it. We have a downtrend, we have an uptrend, then you have a head, you have and back to that same support, close to that support, that resistance, get rejected again. Then you have breakout of that resistance. The breakout of the resistance, then we have then you enter. If you're breaking out, you enter here, take your profit here, you're done. Now you can see this breakout. This is a false breakout. This is a trap, a bullish trap or false breakout. When you see the false breakout and get rejected, the next thing is for you to probably take your profit or short it. So that is these are indications. We have a lot of that formation on Bitcoin. This is one. This is the shoulder. This is the head. Sometimes the pattern you're not going to see it very as clearly as it is here. This is another one here. We have we have a lot of it here. This is one, shoulder one, resistance, head, shoulder two, resistance, breakout. Okay, that's it. Shoulder, resistance, you have the resistance and you break out. This was the resistance. It's actually not a straight line. Sometimes your resistance might not be a straight line, like what we have in. This one is the straight line. This is not a straight line resistance, right? This is not a straight line resistance. The same thing can also come up in your head and shoulder breakout. These are inverted head and shoulders, right? So you have it head, the shoulder. Once you see that, that's an indication of a possible breakout. So you have to wait for the confirmation, then you have a breakout. The falling wedge, okay, that's just what I have right now in Bitcoin. We also have the downtrend. I have a downtrend where we have your resistance is actually moving downward while your support is also moving downward. Then you have a breakout of the resistance. When you have a breakout of this, and for you to actually be able to indicate a breakout of the resistance, you will have seen the volume increasing. When you see the volume increasing, green, that's going to be probably green, depending on the color you're using. See the volume increasing, then you have a breakout, then you have to wait for the confirmation. Also, when you see the volume dropping, this is volume that is red. You see the red and volume dropping. That's the indication of a possible breakout to the downside. That is a rising wedge. You have the rising wedge, then you have the breakout to the downside. You have the falling wedge, then you have breakout to the upside. So this is a wedge. This is a wedge, right? It doesn't close up, and I think we have something like that on Bitcoin right now. So this is it. We have a falling wedge and a breakout, right? So you have the wedge. Not really. This is actually a falling wedge. This is a falling wedge, but the breakout was actually to the downside. Okay, so that's when you really need, like I said, you need to confirm the breakout region. So that right now that you're having a falling wedge doesn't mean it's going to break out to the upside, right? Until the breakout happens. Until the breakout happens. So you have to wait for the breakout to happen and confirms before you actually decide your direction. So I'm waiting again. Let's look for, say we have rising wedge. So resistance, support, resistance, support got broken, resistance, then the support got broken here. Then we have a downtrend. So mostly happen on a short term span, basically. Most of the time it happens on the short term span. So these are things you need to look out for. So that is basically it about candlestick pattern. That's what we're going to be covering today. If you have any question, please endeavor to drop it and ask your question in the comment section, or you can click on the link, join our Telegram channel, and be able to ask your question or drop your question there. Okay, thank you. If you find value in this session, please don't forget to like and subscribe. Okay, these are actually way for me to, when I see the likes, it actually encourages me to want to do more. It's okay, these are actually technical strategies we're going to be sharing. Next, we're going to be having another class, another topic, and reversal stop loss, and how to use the stop loss. Basically, there are different ways to use the stop loss. We're going to be talking about stop loss next week. Okay, thank you for joining, and do have an amazing day. Enjoy the rest of your day. Bye. Thank you.